Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a happy, a wonderful Saturday. We're taking a look here at Bone, which is an interesting coin. I get the question a lot, what's going to happen with this next? We're going to take a look and see if we can find out. Now, we've got some large Fibonacci retracement levels here on the screen. So if you're curious kind of how we set this up, we basically just took the most recent high to the most recent low, back from like February high in 2023, of course, February 20th, all the way down to June 12th. Okay, so again, just kind of a big picture perspective, and the way to be able to identify larger movements is to look at larger Fibonacci retracement levels. We could look at smaller ones, of course, to identify more intraday trading, but for right now, I'm getting the question about big picture, where's this going? So we're going to talk a little bit about that too. Okay, so if you're new to the channel, appreciate you joining us here. Be sure to check out our summer sale down the link below. CryptoCash.tech is our website if you want to become a better trader. There's also a promo code down there as well if you want to go ahead and consider doing that. That is available for this month. Now, what we want to look at here with Bone is a couple of things. So first of all, big picture, we want to look at some RSI and the stochastics, kind of see where we're at with things. Because when it comes to these overextensions or big picture plays, it's important to look at a few things. So first of all, MACD is still converging. We don't have any digression here yet. So until the price action starts to pull back a little bit, we're not going to really see any type of change in momentum. It looks like the price wants to continue. We do also want to identify that on TD sequential, we're at a 9+1. So we've literally had 9 days of continuation, and we're in extra overtime right now. So if I was a gambling man, if you take a look here previously, you see a 9 on TD sequential, and then the price goes sideways and then up, another 9, sideways, consolidates, and back up again. Okay, so again, shorting into this coin is not really all that smart of a play right now based on its history. Okay, now all good things come to an end, of course, but the bottom line here is that overextension really means very little on this coin because these are all healthy continuations. We can see that on smaller time frames, but generally speaking here, it's increasing, consolidating, and increasing again. And a lot of times, with it being less sporadic, it's more consistent, and that consistency leads to better results. Okay, so that's kind of where we're at there in that sense. Furthermore, too, also to note on the daily, we got 70 was broken through quite a while ago. In fact, we broke through 70 on the RSI roughly 6-7 days ago. Okay, so the common rule is that when you break through 70 on the RSI, you wait for the price to break down back below 70 on the RSI before you take profits. So again, if you took profits hitting 70 in the RSI, you're kind of doing it wrong. It's not what I teach you in my trading academy. And bottom line is when you break through that level, you want to let it ride and wait for the RSI to calm back down. And once it does get below 70, at that point, good consideration to take profits. Because once again, even though you could see a bounce in the second wave, it's less likely. Okay, so we're still in this continuation, so all the more reason to not short into it, even though I'm sure it seems very juicy, and I'm confident the way that the market is. I swear that market movers listen and watch my videos, because again, as soon as I say don't short, it'll drop, right? But again, the best practice is to wait for a better long position than to short into a long, unless you're just a crazy trader and you have to do everything all the time. But at that point, you're probably seeing some significant losses. So I'd recommend less is more in trading, and I think it's just ideal to relax and take a breath, okay? All right. That said, we see our second convergence here on the stochastics. It does imply that we have further upside potential. Just recognize once we have a second divergence here, when the moving averages essentially diverge and the price comes back down, the likelihood of the price coming down with it is higher. Okay, so again, if you look at its history, anytime you see stochastics, the very first time it shifts over, it'll have enough momentum to continue. Second time, it's more likely to switch directions. Okay, and you can kind of see this here. Like, for example, say you'd bought this first dip, it wouldn't have been terrible, but the second one is more likely to give you a telling increase or decrease, right? So again, I just think waiting for our second stochastic divergence would be appropriate if you're planning to short on the daily. That said, let's take a look at the 4-hour, see what's going on. So 4-hour time frame gives us a further identification that we are overextended again. Now this overextension, keep in mind, once you hit a 9, it doesn't have to turn itself around instantly, but it commonly will. So if the price were to pull back, keep in mind, it'll oftentimes pull back to this most recent high. So the most recent high here should be the new low if this continuation is still continuing, right? So bottom line is, if you take a look at volume, we still have a lot of volume here so far, so do not short into a coin that has a tremendous amount of volume, because the price action may not drop as low as you'd like it to, okay? Again, if you do low position size, low leverage, I know that doesn't speak to everyone because some people are just kind of crazy gamblers. This isn't gambling, this is trading, right? If you teach it like treat it like a business, it'll teach you less less lessons along the way, and those are usually bad lessons that you have to learn from, because you're maximizing your benefit and minimizing your loss. And so if you're losing less, you're winning more in the big picture because you're actually learning from those mistakes. Okay, again, different strategies, different thoughts, but I prefer to be a little safer. After almost 20 years of trading, I can tell you, I've lost some money along the way, but I'm typically pretty consistent because of the fact that I take smaller risks. Again, that's just me personally. All right, so that being said, taking a look at the 4 hour, we can see here we got a stochastic divergence, which could very well shift down, but the bottom line here is that our RSI is coming right back down to 70. We're not even close to 50. So that being said, with the 70 and the RSI, this is usually a good point in which you want to probably consider taking some profit on the long position. Oftentimes when the price comes up and starts to shift its momentum, you can see that happening. Now, we haven't had a shift in momentum yet on the MACD here. This is a series of moving averages kind of just letting you know that the momentum is shifting. It hasn't shifted there yet. So this is a little premature. I'm not saying to sell right now, but I can tell you that the 4 hour time frame is telling us we might see a turnaround. And if that turnaround occurs, it'll probably be here the first point at 169. Secondary would be this major Fibonacci at 156. Okay, let's look at the hourly though, because this is like kind of confirmational time frame for me to look at. As we look at the time frames here, we see we're overextended as well on the TD sequential here for a 9 on the 1 hour. So if you have a TDS on the 1 hour and also on the 4, the likelihood of a pullback becomes greater. Okay, again, it's just a series of overextensions on multiple time frames. In other words, this coin has been running for some time. Okay. That said, with it being running the way that it is, how much lower could it go? Well, let's take a quick look at the Ichimoku cloud and see. Once again, the cloud usually works as a support level, so the price does pull back. Once again, we can kind of see this line here. Previous high could be the new low where the price action comes down to bounce off the cloud. But for right now, it's basically telling us that a long position is still open. Do not consider closing because we're on the right side of tracks and we're still looking good. Okay? So once again, the bottom line here, common denominator, is do not short into this coin. More long bias because of all the time frames look very healthy. These continuation patterns are nice. If you look at them, by the way, they are a lot of up overs, right? You see this, it's actually pretty healthy. It's not a jagged, mountain range. It's a nice, slow, steady staircase pattern that I like to look for. And that's kind of what I teach in my trading academy as well. How to identify a good continuation. So albeit overextended, it's not an unhealthy overextension. It looks like it's going to maintain itself. And further upside would make a lot more sense than for the price to pull back. Again, we got to hit a certain key level resistance first before we can expect a pullback. We're not there yet. Once again, when I say that, I'm referring to like a larger time frame here. We're not up in this $2.10 range yet. I think once we hit that level, we'd be more likely to experience pullback. For right now, we're going to probably continue to retest these higher highs and higher lows and just keep going. Last thing we maybe want to take a look at here, I'm trying to think if there's anything else we can identify. It's not really too much else that we can look at. And we take a look at the weekly highs, lows, open, close. Really doesn't matter too much because the price just continues to run, right? But the truth is the price could pull back to this 150 range to fulfill that previous week high. And if we take a look at just say fair value gaps, there are some. So keep in mind too, we do lose that 155 range. We could very well see a fair value gap at 145 and or 136 get filled. Okay. I think the probability is less likely just based on this being a healthy continuation. But again, there's no doubt about it. We're overextended on most time frames, and pullbacks typically occur when you see multiple overextensions. So I would say in the relative near future, we got to be mindful that the price could pull back. Just once again, low leverage, low position size. Try not to be overly crazy because I know some folks they'll do like 125x or even 50x. 20x in most cases is still too much when you have prices like this that are running. Again, especially if you're trying to short, you'll just get these ugly candle wicks in either direction. And I get this question a lot from my community members, how do I prevent getting liquidated? Well, a lot of times it's using lower position sizes and lower leverage because then you can sustain these longer swings in either direction if you are more of a swing trader. As a day trader, you got to just kind of have a specific risk tolerance. You got to cut your losses early. Different story altogether. So make sure you're wearing one hat or the other. Try not to be like, oh, I just turned my day trade into a swing trade. If it's designed as a day trade, it should be closed out as a day trade. And if it's designed as a swing trade, it should be kept as one as well. Okay? Just some friendly advice there. Again, all stuff that's available in my trading academy. And again, we do have a summertime sale right now. Link down below. summer sale 23, if I'm not mistaken. All that's information located down below. So I hope that you learned something here today, benefit from this. If you could help us out, grow our Twitter community here. Of course, we have a lot of excellent, awesome, content here, essentially allowing for you to become, again, a better trader. I send out potential playout charts and all sorts of cool stuff. So be sure to check it out. Be happy to get to know you better there as well. Thanks again so much for your time. We'll see you in tomorrow's video. Have a good one. Take good care.